Hey guys, and welcome back to another video on my channel. In today's video I just want to give you guys some tips and tricks as well as a quick overview over my week and how much money I made on this week. And as you can see, I have a little sheet for you here where you can see a win rate and the risk to reward ratio. This is important for when you journal your trades. Like, let's say for example you have 100 trades and you know your average risk reward ratio is 1 to 2. And you have a win rate of 55%, you can see you are very profitable, right? For me right now, my current win rate and risk reward ranges between 1 to 1.5 and a 1 to 2 risk reward. And I average a win rate of 70%, 71% right now. So yeah, as you can see, I'm profitable based on the statistics, based on math. Like, it's just that simple. If you have a risk reward paired with a set win rate, you're profitable, right? So it's pretty simple on how you get profitable as a trader. You just need a win rate that matches your risk to reward in order to be profitable. If you want to see the sheet or save it somewhere, you can just make a screenshot and put it in your notes. Personally, it helped me a lot when I was starting out, right? So, going over a trade I took today. As you can see, we have a nice demand zone right here. Took one high out, took another high out. We have two break-off structures, maybe even three if you consider this a break-off structure. Maybe even three. And then price comes back down slowly. We also have a fair value gap. That's what I like to see right here. Fair value gap gets taken out. We tap into the zone. I had a limit order right here because at the time I had some other things to do. I couldn't really look at the market. And then my order got filled. Hit take profit, and that was basically it. I didn't even notice it until recently when I looked at my charts again that we hit take profit. So that was my trade for today. We also didn't have much news past this time here, so I was pretty confident. And I want to give you guys a little step-by-step list on how you can find setups as well, right? So the first thing I always do is I need to find a break-off structure. As you can see, we had break-off structures all the way right here, like pretty much everything. You could even mark this out as a break-off structure. So we had so many break-off structures right here. Perfect. Then, do you see a fair value gap? If you don't see a fair value gap, simply don't take a trade. I like to see fair value gaps because it makes my zones even stronger, and I see a higher win rate when only using zones with a fair value gap. So as you can see, we have one right here. Multiple break-off structures, and then all we need to do is mark out the zone, which I did right here, and wait for price to come back. So we had all the things on my checklist done and finished. I just waited for the price to come back, and then you can either enter with a aggressive limit order like I did right here, or you can wait for candlestick reaction. As you can see, we also get pretty high wicks of touching the zone, and this is also one reason where you could enter the markets. Another thing I like to use is candlestick patterns, but as you can see, we get a little hammer candle right here. Maybe you could even enter off that. So, straight to my take profit. For take profit, you want to mark previous market highs and lows. As you can see, I targeted this high right here. And for me personally, I like to be realistic with targets, right? So as you can see, we have a high right here. Why didn't I target this high right here? Because it gives me a higher risk to reward, and it would be so good, right, to make more money. Of course, all the new traders like to put their take profit all the way up here for 1 to 4 and be like, yeah, if it hits there, I am like a millionaire, right? But that's not realistic. Trading is a business, and you need to put it on realistic levels in order to be profitable, and that's what I did right here. 1 to 8.4 risk to reward for the trade, so pretty good for me. Almost a 1 to 2, right? So, if we go back in time here to like a couple of days ago, you can see I did the exact same thing. I waited for a break-off structure, then I looked if we have a fair value gap, which we obviously have right there. And then I waited for price to come back, and I love when price comes back slowly. This was a little bit aggressive, then we get a little bit retracement to the upside before touching the zone again, and this is where I entered right here. So as you can see, stop loss always below the zone. I targeted this high right here again, and this was 1 to 1.5, right? So pretty good as well. With a 55% win rate, this would be as well profitable if you only catch risk to reward like that. But I like to vary based on the setup and based on the current market situation that we are in. So if we look over on Nasdaq, you can also see that I had the setup marked out right here, but I ended up taking it on the S&P 500 because I didn't like how choppy price was all the way up here. It looked a little bit better on this setup on ES in my opinion. And yeah, that's basically why I didn't take this trade at all. So on gold, I don't know if I have still marked it out. No, probably not, okay. But on gold, there was also a couple of setups which I didn't take for this week, because gold was like ranging, you can see pretty much all the time ranging in this direction. And that's what I don't like to see. You want to take supply and demand setups only in trending markets, guys. And this was not a trending market, so I probably didn't have anything to do for the entire week. As you can see, pretty choppy price action throughout the entire week, and that's not what I like to see. But if we look at it right now, you can also see that this would be a very, very valid demand zone, okay? So, yeah, that's basically everything I have for you guys. First, find a breakout structure. Second, do you see a fair value gap? Third, mark out the zone. And four, wait for price to come back. Trading doesn't always need to be complicated with a bunch of indicators, with a bunch of different like patterns and analysis tools. You guys are overcomplicating it way too much. In reality, it's like the spreadsheet I showed you in the beginning, where it's very simple what you guys have to do and very simple how you be profitable, because this is a business and this is a math game. And if you're constantly changing things and overcomplicating things, it's pretty hard to be profitable, okay? And as you can see, it's the same thing right here. We get a break of structure, and it's literally that simple, okay? We get a break of structure, we have a fair value gap down into the zone right here, and price hits the zone straight up to take profits, easy. Another trade right here. This trade, I probably wouldn't even have traded the zone, because the high I wanted to target would be very close to the zone. You see, if I target this, it's barely a 1-to-1. 1-to-1 point, also, like 1-to-1 risk to reward is also fine. It's okay, I think. Sometimes I even take a 1-to-1 if there's no other setup, but yeah. Don't usually like to take it. And as well, you can see we have a valid setup right here again. Fair value gap, break of structure, comes back into the zone, aggressive entry, and maybe this is a setup you could have taken. Yeah, as you can see, a 1-to-3 risk reward. So I like to plan around the current market situation that we are in and not take anything for granted or fix myself on a 1-to-2, 1-to-1, etc. So that's what I like to do. As well, thank you guys for the heavy support on TikTok recently and also on my YouTube channel. If you want to learn trading even further this year and want to start out, please subscribe to the channel. It would actually mean a lot to me. And yeah, what can I say? I wish every one of you the best, and yeah, I hope we see us again in the next video, guys.